Well, hello everyone, and welcome back into Crypto's News. It's me, your boy Omar Bam, here to give you all the details on why the camera is not working, apparently. It just flagged out. I wonder what's going on here. 1 second, guys. I'll be right back. Okay, all right. It looks like we're back. My apologies. Okay, all right. It looks like we're back. My apologies, guys. So yes, welcome back to the show. We have quite a show put together for you guys. Thank you for joining me here today. And if you are watching this, you want to support the channel, remember to hit that like button right now if you can. It would help people find this stream while we're live and hopefully attract more viewers so we can have great action in the live stream chat like we used to back in the day. Love to see it. Share thoughts and bounce ideas. I love to be corrected. I love to be getting feedback from you guys on how to make the show better. And the best way you guys can do that is by sharing these videos, liking them, so we get the word out there about the new channel. But yeah, like I mentioned, we got a lot going on right now. It looks like Ethereum season may be here. So I have gone on the record on YouTube over the last couple of months talking about how I don't believe that there necessarily is a crypto cycle anymore. I do, however, feel like there will be cycles that are particular to certain projects or coins, right? Or certain industries, something that we've seen in the past. What I'm trying to say is I don't think Bitcoin will be the primary driver. Oh, we're losing a little bit of the camera. I might have to get a new cable after this. But either way, the audio should be just fine. So let me know if there are any issues there. But yes, I do feel like Bitcoin might not be leading things, but we do get cyclical cycles and other things. For example, if we are entering an Ethereum cycle, we finally break beyond 4,000 like we're doing right now, and then we break all-time high like I alluded to in the video, we could easily get a lot of euphoria moving forward here that drives the price way beyond any sort of fundamentals. What we're seeing right now is, I think, the market trying to reestablish what is a fair price for ETH, realizing it's quite undervalued. As we're seeing right now, what's going on is that retail doesn't seem to be paying attention as much anymore. It's not just my channel. Well, this is a new channel, but still, even on the old channel that had lost retail, so average people watching, it's pretty much the same across the board with a lot of these crypto content creators, as this is a new thing that the market is looking at. How many retail folks seem to be participating based on the viewership on crypto-centric YouTube channels? And that has been on the decline. But what is not on the decline, however, is interest from institutions, from Wall Street. And it looks like Wall Street is now turning their attention in a big way over to Ethereum based on some of the things we're going to be getting into in a little bit. So I do feel like it could be the case that we do see some sort of cycle. We break, I don't know, maybe we'll do what Tom Lee says. We're going to look at some of his content later on in the video. Maybe we can still do a 100x for Ethereum, which would be quite incredible. But if we did that in short order, what I think it would mean is that if we went beyond fundamentals, we could easily see a correction, which might even look like a crash, depending how quickly we climb. But anyway, all this to just say, I think you guys are early. I think our time, for those of us who have been holding on here, watching Bitcoin go up, watching other networks go up, and ETH stay flat, if not drop, I think our time might finally be arriving. And that is what people are waking up to now. So let's go ahead and start off our journey today. Thank you for joining me here, Kevin, Validator, for starting to kick things off here in the chat. Let's start off by looking at CoinGecko. So we currently have Bitcoin dominance at 58.5% and Ethereum at 12.2%. You might remember we were below 10.9% on Ethereum recently. So quite a gain that's been going on there. Market caps overall ticking up almost at 4 trillion again, up 0.4% at $3.967 trillion across the 18,006 coins that are being tracked here on CoinGecko. We have Bitcoin up 2.7% on the last week. It is at $116,912. We have Ethereum up a really decent 13.8%. So one of the highest climbers here in the top 10, only beaten by Lido staked ETH, which is still ETH. It's just staked ETH, which pretty much tracks the price of ETH. So Lido staked ETH up 14%. We have Dogecoin over the last week up 13.3%. Solana at 8.4% over the last week. XRP up 10% over the last week. And Ethereum, again, breaking $4,000 at $4,030.40. So you saw that just happen quite recently, pretty much this morning, where it finally broke it. People were ready for it. There have been a lot of conspiratorial talks about how Binance, with their ratios of what they keep on balance for their Seifu fund, right, in the event that Binance has some sort of issue, they're over collateralized beyond the deposits of cryptocurrencies on that exchange, one of the more popular exchanges. They have been actually dwindling their ratio reserve positives away from Ethereum, and people are saying they're basically moving ETH in order to sell it whenever it's spiked. So it certainly could be the case, and that's something Tom Lee said in an interview, that we have been seeing price suppression from different market makers. He basically said, since he's been buying a lot of Ethereum with his company BitMine, that he has heard some things behind closed doors about Ethereum, but that has not stopped him from trying to hit a target of accruing 5% of the entire supply, much like we've seen Strategy do previously, MicroStrategy with their Bitcoin reserve. Now we're seeing really a push toward Ethereum reserves, which we're going to get into in just a little bit. But before we get there, here's the Bitcoin dominance. You can see it's just ticked down. It seems to be following this trend of actually going down over time. It does have some sort of, I guess you could call it, base, maybe around, I guess if we push this forward, this graph that goes back to 2013, maybe around 50%. It will bottom out, I would imagine. But also the top seems to be coming down, which would be kind of natural if you see more and more coins with higher market caps. But at the same time, many of these altcoins don't have much staying power beyond marketing pushes from venture capitalists who invest into pre-allocations of pre-allocations, but they have no actual revenue or whatever. Therefore, they kind of just die away after they've had their cycle of pump and dump, right? But there are others, such as Ethereum, that do have staying power and continue to climb. So right now, it does seem like we're having kind of a shift here where we have Ethereum actually going up and Bitcoin coming down, which is bringing back talks of the great flippening, which would be this hypothetical scenario where Ethereum could break over the dominance of all market caps beyond what Bitcoin has, which almost happened back in 2017. It's funny that we have folks saying that this is the 2017 year for Ethereum compared to Bitcoin, which happened in 2017, this huge jump, which I was around for, and I'm pretty sure Ethereum performed even better than Bitcoin back in 2017. So, I mean, I still would love another 2017. It would just be kind of rhyming, right, like history did. But before we get into more of that, and you guys are going to want to stay tuned for the whole episode, I've got plenty to share with you guys. I know you hear that a lot from other YouTubers, but I do try to fill this content in a way that will not waste your time and it's especially over the last week, since I'm only doing one stream a week recently, it's going to be just dense. So just stay with me, guys. Here we are. So we first started off this week, actually yesterday. So we got this news about alternative asset investments for 401k investors, an executive order from President Donald Trump's desk and administration that is basically hoping to rewrite these ERISA rules. These old rules are created, I believe, back in 1974, which tried to make it so that employees benefited rather than Wall Street out of investments that came through the workplace. So you might have a job, right? A career where your employer offers you a 401k, which is quite attractive until you try to sell before retirement for huge penalties and taxes. But I digress. Anyway, a pretty good way sometimes of even doubling your money. Your employer might match up to 2%. So if you're throwing in, I don't know, $100, you're going to get $2. extra matched, right? Or they'll match up to a certain percentage of what you put in there, or 100% match in some cases up to a certain level. But anyway, a really popular investment strategy that is offered by workplaces and kind of in a marriage with Wall Street that benefits certain parties over others. So these ERISA rules from 1974 basically made it so that it would be, again, more beneficial to employees rather than Wall Street by allowing them to really invest in safer things like bonds, vetted stocks, gold, cash to a lesser degree. But now this executive order seeks to change these rules. So this is setting up the foundation for these rules to be rewritten to allow for certain other private equity investments, so certain stocks, which would benefit Wall Street in some ways, but also crypto. So you might see that you could now get into some sort of Bitcoin or cryptocurrency option for your 401k. So this would be automatic investments to trillions that would be happening through workplaces, through the most popular investment through workplaces, directly into crypto, basically just full moon fuel, I guess you could call it. Now, one thing to mention, of course, is that this is not going to be immediate. What's going on here will take time to rewrite. After the regulations are rewritten, it will take time, says CBS News, for the major retirement plan companies such as Fidelity, Vanguard, T. Rowe Price, and others to develop appropriate funds, these 401k funds, crypto 401k funds or otherwise, for employers to use. Employers are not likely to revise their retirement plan options quickly as well. So it's up to the employer as well to see which of these funds that are available they offer. So that might take even more time after these options are first devised, right? So it may take several years before crypto and private equity investments are mainstream in an individual's retirement plan. So it's not going to be immediate, but I think that this, again, just kind of got the market a little bit more euphoric. But this is something that over the long tail, if it continues on its trajectory that was set up here, will continue to push crypto much higher and make it another option for folks to get involved in a passive way. I love this. Fabda said this. Fabian, I believe that's Fabian, said, ETH in your 401k? ETH is your 401k. Amen to that. I remember cashing out my 401k to put into ETH, and that was the best, despite, again, the penalties that I mentioned over the years and taxes, the best thing that I've ever done. I actually think I put it into different things. I went into some Dash. I went into some Ethereum. I went into some Bitcoin. You name it. I was really just putting my chips all across the board, primarily, of course, still in ETH, but I was placing bets. I'm not placing as many these days, but there is one that I put out on X yesterday that I got involved with, fair disclosure, so I wanted to give it a brief mention at the end of this video. So Coinbase is also launching decentralized exchange trading for users amid volume decline. So Coinbase facing competition. You have banks getting ready to offer crypto services. Maybe they even cut fees to zero. And Coinbase is trying to keep up here. So they want to be the all-in-one app marketplace where you go do all things for crypto. So they're integrating directly into other decentralized exchanges such as Uniswap. So users will be able to engage from the Coinbase platform directly into those decentralized services. I think that's very interesting. This is rolling out in the US in, of course, most places except in New York State using their Ethereum layer 2 base. Also, we're going to get into now about... did I put this out of order? Actually, yeah, I did kind of put this out of order. But I guess I'll just say it right now. So we're going to be talking about these Ethereum reserves that are now coming to the forefront of the crypto consciousness. And Ethereum treasury firms are just getting started and could 10x their holdings to 10% of all ETH over time. If we actually consider, as you'll see in a moment, we consider the Ethereum strategic reserve companies that are coming out and accruing more and more of these things. And we also consider the ETF holdings that you could consider somewhat locked out of the market in certain ways. then we actually are seeing numbers that are even higher than 10% currently. So that's only set to grow with these huge pushes that we are seeing at this certain time. But before we get into more of that, I did also want to give a mention to something else that gave a boost here to Ethereum, was a statement from the SEC on liquid staking activities. They have decided that liquid staking activities that generate a token, said token is not a security. So liquid staking activities in connection with protocol staking do not involve the offer and sale of securities. So this is quite good and would open these up more and would prevent further regulation and disbarment from these kinds of tokens across many exchanges, further fueling their liquidity. So this is for tokens such as CBETH. So this kind of benefits Coinbase, we just spoke about briefly. For example, if you don't want to lock up your ETH for a certain amount of time, you can instead get CBETH. Or if you have tokens that also generate staking rewards that are accrued by the network. So basically they take ETH, they stake it, they generate this other token, and they give it to you on that their behalf, on that token's behalf. And you can also trade this token freely, tends to quite closely follow the actual token price. So ETH and CBETH are quite closely linked. There are many other protocols that are doing similar as well, where you might stake your ETH, get some token that is a redemption for that, but you'd be able to trade this token as opposed to having ETH locked up and not being able to trade that. So I think this is really interesting. Something else driving Ethereum forward here. So definitely some friends out there. And we also had we had Harvard buy a bunch of Bitcoin in their trust. They actually bought iShares Bitcoin Trust ETF. So when you are an investment firm or have some sort of product, you do have to file with these quarterly reports and so on with the SEC. And we can see here that they bought a huge amount, over 116 million of these shares of this Bitcoin Trust ETF. I'm not going to say the exact number, being quite religious myself, but it also goes to show that they're quite maybe anti-religious or anti-Christian, I guess you could say, with the exact number that they decided to buy. And it seems rather unusual considering the other holdings that they have filed here with the SEC. Strange move, but I guess Bitcoin holders are happy. They don't really care. Anyway, strategic Ethereum reserves had approximately $200 million in April, and they're now at 10 billion. They pumped 50x these total holdings that we're seeing out there. So we can best outline this by going over to strategic ETHreserve.xyz. So this again shows us the different companies that have strategic Ethereum reserves for their treasuries. At the top is Tom Lee's Bitmine Immersion Tech here with a $5.78 billion market cap. And we have a total of $3.35 billion worth of ETH that they have accrued so far. So they have 833.1K, about 1% of the Ethereum total supply. And they did that in very short order. They just announced this back in June, and they just been buying and buying, on track to try to accrue 5% of the total ETH in existence. And as you see this ETH being accrued and less of it being generated by the protocol, by miners, or actually stakers, I guess you could call it now, what ends up happening is this pushes up the price even more and more. And there's also MNAV to consider here. So MNAV is looking at the market cap and the net asset value. So you look at the amount of ETH that they have versus their market cap, and you divide the market cap by the net asset value of the total of ETH that they have, or Bitcoin, if we're talking about Bitcoin or whatever you're talking about. And we get this number to see whether the price for shares for this stock or equity or whatever it is, security, is overvalued relative to the actual spot price of the asset that they're holding. And so we can derive that number. And they're trading quite high right now relative to it. But I think they're set to do quite well, just like following Strategy's strategy. We also have SBET coming up. So they're holding quite a bit too, 520 21.9K. That's Joseph Lubin's company, founder of Consensus. You guys remember I've talked about him a lot in the past. And we've talked about SBET as well. They were the first to do an Ethereum reserve, and they're right there at the second place right now. So all these companies now competing. I mean, they have even more than the Ethereum Foundation, which I think should surprise some people when they still hear this for the first time. The Ethereum Foundation just has south of $1 billion, and they only have that because the price for ETH just climbed, right? They only have 0.19% of the supply. BitMine actually has 0.69% of the supply. Again, on setting their sights on 5% of the Ethereum supply. Anyway, continuing forward here. Our Ethereum treasury is good for Ethereum. We heard from Vitalik on Bankless, podcasters. And yeah, in the video, he talked about how ETH being available in all kinds of ways, more options, is really a good thing. The only thing that concerns him is over leverage that could eventually cause cascading and sell-offs that would be problematic for the price being an issue, really. But yeah, I think he's a fan even of these treasuries. And if we look over at ultrasound.money, this is a place where you can see what the burn currently looks like for Ethereum. So if you remember, after Ethereum improvement proposal 1559, Ethereum began to be burned every block, and that continues. So you can kind of track how much is being burned, how much ETH is being issued, and this changes by the second pretty much. Well, they have 5-minute time frames on here, but yeah, this is an average I'm looking at here over the last 30 days. We're basically burning $0.3 billion. The supply growth is 0.73% of the Ethereum supply over the last, if this continues in the same way, over a year, and issuance is 3.4 billion in USD over the year. But if we had not had Ethereum improvement proposal 1559 and subsequent staking for Ethereum when we moved over proof of stake, check this out. We would have been issuing almost $17.5 billion a year, as opposed to what we're seeing now, which is only 3.4 billion. And supply growth would have been 4%. So I think some of these fundamentals for Ethereum when it comes to supply issuance have really become a lot more grounded and more attractive for investors, and people are waking up to that. They might have written off ETH because it's not limited in supply. But again, ETH has even lower issuance right now than Bitcoin does. So yeah, I don't know why this chart is all... Basically, you have about 0.962% issuance per year for Bitcoin until the next halving, and right now it's around 0.85 for Ethereum. So pretty good, even better than Bitcoin. And I found this interesting, the flippening chart. So this is following the ICO. So this is going back almost 11 years to, I can't believe it's been so long since Ethereum launched. And yeah, the flippening came close in 2017 to passing Bitcoin's dominance. And in fact, it's been following the trend line really closely. In fact, it's just hit the trend line again after dropping below it. I think the market was like, oh no, it's over for ETH. It's going to drop below the trend line, keep going down. Everybody just buy Bitcoin. The maximalists were right. Everything else is going to zero. Better just hold Bitcoin. But now that's maybe proving to be quite wrong. And there's still a reason to be involved with maybe other altcoins that are solid like Ethereum. Anyway, 7th time the charm for Ethereum, says Chris Dunn. So we've hit this 4,000 to 5,000 resistance in the past quite a few times. Will this time be different? I actually would think, yeah, based on what we're looking at with these Ethereum reserve strategies and other comments all over social media, I think this might be the time that we actually break all-time high and go beyond 5,000. And at that point, we enter what's called price discovery. You're going to see it in all the YouTube headlines and all over crypto Twitter, how price discovery means no one knows what the ultimate high value will be. And that's when the bubble really begins, my friends, I should say. But anyway, you guys are quite early, I would say, if you're holding ETH right now at this point in the cycle. Had plenty of time to get scared and out of ETH over the last few years. But if you held on, mad props to you. So, oh, what's up, guys? Nice to see you, Scream Engine. Thank you so much for that comment, bro. And also, Validator, ETH has easily outperformed Bitcoin over the last 10 years. Yeah, I mean, it has outperformed. I don't know, those people who are always saying Bitcoin has been the best performing asset relative to the S&P and all this. I'm like, yeah, if you ignore Ethereum, so relative only to those things. But Ethereum has way outperformed Bitcoin. So I think it's actually on track to continue to do so as well. Anyway, so this is the coin that I bought yesterday. It was Chainlink. It's one that I held back around 2017, 2018, 2019, eventually sold it. The market did not seem to favor altcoins. I didn't see much movement. I wasn't still super sure that they would be a mainstay, but they have proven themselves. They have made continued partnerships. They're a decentralized oracle, and what they do is give us the truth based off of different inputs that they get. So we might want the truth. What is the true price of Bitcoin? Do we go to Coinbase for that? Do we go to Binance? Do we go to Bloomberg's desk for that? No, we could instead use a decentralized Oracle feed for that. And that's basically their primary thing, but you can make a decentralized oracle for anything. To me, what gets me excited about is being on board here before they decide to do some sort of AI truth oracle, maybe decentralized truth for anything. I think that would be really exciting, especially as we see GPT-5 just launched yesterday, ChatGPT-5, and still massive hallucination rates, even higher maybe even than their previous model. So we want truth, and doing it in a decentralized fashion with a vetted player, trusted smart contracts, I think will be crucial as we go forward here. So what I did here was I decided to take another investment position in Chainlink again. And it proved really good when I recommended it the first time. I had gotten into it, been reading it. Not financial advice for you to do it again, but I was reading their new blog post, and it looks like it's going to be quite fruitful as well. Introducing the Chainlink Reserve, creating a strategic link token reserve. So they're making a reserve for their own token rather than like an ETH or Bitcoin reserve. They're going to be doing it from offshore and onshore, so different ways that they generate revenue through the blockchain and other partnerships, for example, that generate revenue off of the blockchain and creating automated almost ways for that money to come in, and using account abstraction, turn that into Link that will be held by them, as they've said, for multiple years, which would mean less selling pressure, more demand for the token, and something that investors do want. So I think this blog post does a really good job of outlining how this would work. If you want to check it out for yourself, I'm not going to read the whole thing for you. But yeah, really, really cool. And they're using the network natively to write all these contracts. So I think it's going to be really, really fruitful for them going forward here. And that Chainlink Reserve currently has $1.3 million of reserve. It's not that much, and they're growing quite slowly after this was published. But this is, again, a long-term bet for me. I'm not expecting this to pay off over a day or a week, although it's been quite well over the last day since I got in. But I think over the next few years, they're going to you'd be surprised probably how much is in there, as this is a new pillar for growth for them, I would say. And I mean, look at the partners: UBS, Fidelity, MasterCard, many of which they're getting more and more interested in crypto and trying to find ways to work with it. So these partnerships finally a good thing, I would say, for Chainlink, like you hear with so many others. So one video that I enjoyed, I would recommend you guys check out, is Arthur Hayes on David Lin's channel. Arthur Hayes, Bitcoin to $250,000 by December. The money printing storm is coming. So, I mean, not too much of a surprise. Arthur Hayes is always talking about this kind of thing. I'm actually not betting we're going to hit $250,000. I watch this more to see what he thinks about macro, how the co-founder of BitMix, founder of perpetual spot leverage trading, basically, what he's thinking about the market and how he's approaching things. And he's quite candid in his blog posts. And it's nice and quite refreshing to hear his thoughts across the market. But since we've been talking about so much ETH, he also gave ETH quite the nod. He basically said, what is hated more than ETH? And because ETH is so hated, I really think it could outperform here. In other words, he thinks that it is undervalued, something that is somewhat of a recurring theme on today's episode. And I will imagine we'll continue as we go on here. So Tom Lee said, Wall Street has already decided they're going to rebuild on Ethereum, as you can see with companies like Fidelity, UBS, and so many others, again, doing pilot programs and testing on Ethereum primarily. Like they've basically chosen Ethereum to be where they rebuild the future of finance or the next leg of finance, or our lifeboat, rather, for the dollar and everything else. Oh man, these ETFs and strategic reserves are all tied to the dollar, though, in the traditional financial system. Unfortunately, they're not truly decentralized, and in some sort of systemic issue, funds would be locked and there would be a lot of uncertainty. But if you did have your private keys in your wallet, still would have access to those funds. So this is something that really benefits Wall Street more than the average person. A lot of what we talked about, 401ks, reserves, but even average people can benefit from price appreciation, which is why I mention it. But if you want to check out the whole chat I did myself, it is on Bankless. You can find them on YouTube or go to bankless.com. I stopped watching them so much. They became hardcore like Solana fans, kind of shills. They were shilling Ethereum for a while as well, and like only Ethereum, then suddenly switched to Solana. It looks like they're back to Ethereum, I guess, Ryan and David. So they had him on, and he actually seems to be really, really informed these days about where Ethereum is headed, courting so many different investors over to the Ethereum side. And, this is really what Ethereum was needed. When the community was upset about the Ethereum Foundation not doing their job and so on that we had discussed, what we needed to see was attention from others, right? Other entities. It shouldn't have been that we should rely on one centralized foundation, right? That's exactly antithesis to what many people invested in Ethereum for in the first place, right? Especially even like in the ICO. That was not the plan, right? So it's good to see these new reserves becoming a new parallel growth structure for Ethereum. So I do recommend this video. He gets into a lot, and I could not possibly cover it all here. I did mention some of it throughout the video, but I do recommend you watch that after if you want more information on what's going on here in his quest for 5% of Ethereum's supply. I mean, like if you weren't bullish enough, I would absolutely check that video out. Anyway, we all need reminders sometimes about our investment thesis. I actually had a nice chance to chat with him back in, 2018 at Chainx Change. I got to meet him there. I asked him a few questions. Here's one. I asked him about, what do you think about fractional reserve Bitcoin?
Do you have any similar concerns about fractional reserve systems in the future being integrated within ICE, even though they start off as delivery?
I think fractional reserve would have very little funding support because everybody understands tail events and liquidity. I mean, skew is really central to value at risk management, and nobody can build a VAR model around a levered Bitcoin. I mean, look at how BitMEX, it's tiny movements that cause margin calls.
Mm-hmm. So yeah, thanks for sharing some positivity.
Yeah, it was a blast just going out there and meeting all these different crypto people. They're borderline unapproachable these days. So I was really blessed to be there quite early and documenting it. Thank you guys so much for supporting me and my work throughout the years to be able to do that. I do hope to get back out there. I do have a lot of recognition and names still in the space, so I can definitely still get some of those interviews for you guys. But we're going to have to grow a little bit, secure some funding. Let's see that 100x for Ethereum, right? and we'll get back out there to the conferences, hopefully sooner rather than later. Like Kraken says, when you have those days, when in doubt, zoom out. And our quote of the day to wrap up here by Martin Luther King Jr.: "Nothing in all the world is more dangerous than sincere ignorance and conscientious stupidity." Anyway, that's the show that I have for you guys. I hope that it was insightful. I hope why am I pulling this away? Anyway, yeah, I didn't sleep well last night. Actually, the last 3 days. But I had to make sure to come out for you guys. You guys are always here for me. That special shout out to my Patreon sponsors, to my YouTube sponsors, you guys here, Jackknife, B Internet, Validator, I Guy, hey, what's up, man? I didn't even realize you were here. Kevin, who are always out here and maintaining the chat any time of the day. It means so very much to me. I appreciate all the love, and I send it right back to you guys. So, and that applies to all my viewers who've been out there. Even if I didn't give you a shout out, you're just quiet in the background. I love it when somebody's like, oh, I watch your videos all the time. I never comment, but like just wanted to comment once. Like, thank you for that. Anyways, take care, guys. Much love. Catch you next week, and stay cryptic. Peace.